What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about the unemployment numbers that just came out earlier today. Today was the first Friday of the month of March, and we did get the numbers for the month of February. The markets are ripping higher yet again to new record highs, not to mention semiconductor stocks, chip stocks, and growth in tech ripping to new all-time highs yet again. We've got Nvidia here trading at almost over $950 a share. AMD also breaking out to over 220s. Again, new all-time highs for advanced micro devices as well. And of course, not to mention Apple with a nice recovery pushing up over 1.4. Google recovering over 2%. Tesla's also somewhat green here on the day. So we're going to break down everything you need to know about the unemployment numbers. We're going to break down exactly why the markets are rallying, even though we did get a very strong labor market report. I'm going to break all that down in this video. As always, if you enjoyed, find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the members-only private videos. Again, all the Excel spreadsheets are going to be moving over to our moneyvest.com website here fairly soon. And of course, you will have access to our Discord channels, including trade alerts and trade ideas as well. So links going to be down below. We'd love to have you on board. And also do connect with me on Instagram. My handle is going to be CASWRP. I do post a lot of interesting stories and portfolio updates and polls and tips and strategies over there as well. So moving over to hiring, boom continues with 275,000 jobs added in the month of February. So non-farm payrolls coming in at a very hot 275,000. So a little bit of an uptick from the previous month. So that was the actual number, well above consensus of 190,000. Unemployment rate actually did take higher, 3.9%. So that is one of the reasons why we actually did witness the markets ripping up, because this is actually quite a substantial move. That's a 20 basis point move higher on unemployment rate. So almost at 4%. And that is exactly what the Federal Reserve wanted to see. They wanted to see some softening in the labor market, because this kind of reiterates the idea that, okay, higher interest rates are finally starting to play a bigger role in the overall economy. And that's exactly why we're seeing unemployment rate starts to go back higher. Now, even though we are adding more jobs, in the economy in the month of February, the reason why the unemployment rate goes up is because of the participating population as a percentage of basically total unemployed persons as a percentage of the total participation population is going higher. So let's just come over to our spreadsheet, and what you'll notice is that the total participating population is 166.5 million, because the participation rate was 62.5%. So we can basically, this number is going to be the total eligible workers, and participating population is going to be just that 166.5. So that 166.5 divided by 266, we get to a 62.6, 62.5%. That's going to be that number, participating population. And the unemployed persons, you can see that unemployed persons 6.46, and that is a very, very important number. That's exactly the most important number when it comes to unemployment, because if you come over here and take a look at the BLS website, so let's just quickly break this down live. So we're going to go over to bls.gov. We're going to go over to subjects. We're going to go over to national unemployment rate. You can find that data online for yourself, publicly available. You can go to read more. And then from this drop down, we're going to select civilian unemployment, go. And you'll notice that there was a little bit of an uptick more recently. So this right here, from 6.124 million to over 6.458. That's the highest level that we have seen since January of 2022. 6.549 was the last time you saw that. 6.458. And even over here in October, we didn't get up to as much as 6.45. This is the first time we're getting up to that level since January of 2022. So once I plug in this number, 6.458. So once I plug in that number here, 6.458. So if I look at that, 6.4582, we get to a 3.9%, because this is unemployed persons divided by participating population. And that's the uptick. That right there, folks, is why the markets are ripping higher, because that unemployment rate ticked up by 20 basis points. Not only that, the ratio for JOLTS divided by unemployed persons also stabilized down to 1.37. Now, this number has been coming down from 2.5 to 1.37 now. That's where it sits, because the JOLTS numbers came in at 8.86, and now we're sitting at 6.46 million unemployed persons. and now we're looking at a ratio of 1.37. So we're very much normalizing to a point where there's going to be most likely one job opening for every one person that's unemployed. Obviously, we don't want this number to be going below one, because that's going to be a lot of distress situation in the markets and in the economy, because there's going to be more people unemployed than available jobs out there. But right now, this is exactly what the Federal Reserve wanted: 2 hit points on this data point, 3.9% increase from a month-over-month basis. That's very good. Not for the economy, obviously, because we did see, a substantial increase in the number of people that lost their jobs, as a percentage of their overall participating population, and of course that ratio also going higher. So those are some things to keep in mind, because this is exactly what the Federal Reserve wants, and as a result, we are seeing expectations kind of improve once again. So 1, 2, 3, 4 rate cuts are back on the table for 2024 after this data print. Earlier it was 3. Earlier it was a little bit more aligned with the Federal Reserve expectations, but after this number, we are now back to 4 potential rate cuts in 2024. And the market's doing what they do best. Take a look. AMD up almost 7% here on the day. I mean, this has been one of my top stocks. I've mentioned this time and time again. Absolutely incredible momentum for Advanced Micro Devices. We've been talking about this stock since $90 per share, since about 4 months ago, since November of 2023. And this stock has seen a 131% rally. Nvidia here also up to $970 a share. We got Google, Meta, Apple, all of them just ripping to new all-time highs. Meta here $520 per share. Google and Apple are still somewhat recovering right now, and Amazon here just under $180, with Tesla the only underperformer on the day, which is still struggling at the moment. But if you take a look at the S&P 500 here, new all-time highs 5182, so almost at 5200, with the NASDAQ here also ripping to new all-time highs at 16,427, up almost 1%, getting up to 16,500. It's just shy of 16,500 at the moment. So hope you all enjoy this video. This is again, obviously not that great news from an economic standpoint, but excellent news from a monetary policy, quantitative easing, and financial markets and stock market standpoint. That's exactly what ends up happening. What is great news for the markets may not be great news for the economy, and what is great news for the economy may not be good news for the markets, and that's exactly how we are seeing the data at the moment. So let me know your thoughts down in the comment section below. As we've already learned from Jerome Powell over the last couple days of the testimonies in front of Congress, he is very adamant on this idea that inflation is really what's going to dictate where interest rates end up going, because at the end of the day, if interest rates do come down to 2% target, that core inflation, that's the only sort of incentive for the Federal Reserve to start cutting interest rates and start their quantitative easing process. Otherwise, they are very much going to be hell-bent on the idea that inflation is nowhere near their target and interest rates can stay a lot higher for longer. However, that argument is also starting to go away as we just saw unemployment increase, right? So no longer is the economy super strong. No longer is unemployment really tight. Of course, this one recent data point does not make a trend, but it is moving in that direction where the Federal Reserve is seeing that softening in the labor market, which is going to only increase the probability for potential rate cuts in 2024. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like, subscribe to the channel. Let me know your thoughts down in the comment section below. 16% annual discount available until the end of this month. As always, happy investing. I'll see you all in the next video.